Good afternoon, ladies and gentlemen. Welcome to our webinar presentation with Allison Ostrander, where she is going to talk with you about how you can manage high volatility movements while also maintaining a low risk profile with her profits recycling method. Some quick housekeeping to go over. You may see some interactive features like polls and offers popping up during the webinar. Also on the right hand side, you'll see a live Q&A tab where you can ask questions that will go to our moderator team as well as Allison at the end of the presentation. If you'd like to maximize your screen real estate, you can minimize the chat section via the down arrow just above the chat, and you can also maximize the video by hovering over the video and clicking enter full screen. And now it's time to get started. Ladies and gentlemen, I present to you the one, the only, Allison Ostrander.
All right, thanks so much. Appreciate the intro. Hey there, everybody. Good afternoon. My name is Allison Ostrander, and I am the Director of Risk Tolerance here at Simpler Trading. And in tonight's webinar, I am going to talk with y'all about the profit recycling strategy and how I have been able to adapt it to fit the more volatile market environment, as well as what you want to look out for when that volatility starts to slip away once again. So here is one of the trades that I took last year when the market was acting the volatile way it has been. I opened this trade back on September 12th for a very small risk of 50 cents, all about keeping my risk as small as possible and really allowing that to work as much as it can for me. And the next day, one day later, I profit recycled that to lock in a $6.30 profit while setting up a bonus trade. Now, for those of you who are maybe brand new to me and don't know who I am and you're hearing terms like profit recycling, don't worry. I hopefully will be able to encompass that in the webinar. And for those of you who are familiar with me in this strategy, I am hoping to be able to show you the ways that I've adapted to fit this market environment while keeping my risk really small, just like I did here. And with that bonus trade that I had on with no capital risk around it, I was able to let it go into cash settlement, avoid the pesky day trading rule, and ended up still taking an additional $5 bonus profit. So in total, I locked in a $1,130 profit per contract off of a $50 risk and was able to have a 2,260% return on that risk, all just within one day into the next. So 2022, right? It certainly had some interesting market conditions, maybe brand new to some of you traders, even if you've been trading for a couple years. And this market has been extremely challenging for some traders due to some of the following conditions: huge gap moves, both up and down, wide daily ranges, crazy premium in the options, which has spiked up and made things a bit more expensive in this market. Strong moves in both directions, right? Both to the bullish side and bearish side, as well as uncertainty of when to go short versus when to go long. And maybe some of you guys had some difficulty last year. I'll send out a poll. Maybe you see it popped up on the screen. Just curious how well you did during trading with the volatility last year. Did you rock it, right? Were you profitable overall for the year? Were you a bit of a seesaw, right? You had some wins, but you also took some losses and kind of remained flat? Or was it just an awful experience and you wish you had just sat on your hands maybe and not taken any action whatsoever? Let me know, certainly, and we'll go over the reviews in a little bit. But if you did struggle, right, I completely understand, especially if it was because some of the situations that I just talked about up here. Given how we went into the close of this year, there's still a lot of speculation about whether or not we will continue to move lower and in turn probably have a good chance of seeing volatility continue with the market, or if we start to move away from that and go back into a more bullish trend. If we do go back into a bullish trend, the drop in volatility and in turn the premiums can be really tricky for traders who actually did well in the volatile market prior. And it ends up causing them to give up a lot of the profits that they may have taken in the prior year. And certainly, if you struggled with the volatility, right, and it's here to stay, which for those of you who know my longer term outlook that I've discussed in the past, y'all know that I'm thinking it might be a little bit more volatile, at least for the first half of next year. And if the case, right, and you struggled with that volatility, or maybe you're just looking for a way to keep your premiums really small, this strategy might be able to benefit you. Either way, knowing when there is or is not volatility is key to maintaining profits when trading. No matter which happens next year, if we do start to go back into that bullish trend immediately, or if we do see a bit more of that stronger volatility to the downside, I plan to be prepared for both possibilities. So, what you'll discover on tonight's webinar, we'll talk about the evolution of the current market and trading strategies. We'll talk about strategies for intraday moves that don't blow out the bank, right? Managing free trades for bonus profits, and we'll talk about how that works, as well as how to avoid paying outrageous premiums, right? I'm all about keeping my capital risk small. And with, unfortunately, the volatility, there comes that spike in premiums. So we'll talk about ways to work around that, as well as specific trade management hacks that have worked in any market, but have been especially important going into this year. And I'll also give you an insight to a checklist for transitioning in as well as out of volatility and some of the signs that you can look for to be prepared for that. So, for those of you who don't know about me, I actually started my trading journey with a fresh out of college with a BFA in theater performance. I do not have any sort of finance background in the traditional sense. And so I was actually introduced to the idea of trading from my dad. He wanted to get the kids involved. He had been doing some covered calls and wanted to expand his options journey. And to me, it sounded like a much better idea than waiting tables at the time. And it sounded like a way that I might be able to support myself to pursue my endeavors from an artistic point of view. So I was all for it. And I started, just like maybe some of you guys did, watching free videos, trying to get a concept of what was happening. I paper traded a little bit. And once I grew that paper trade account and at least understood that I had some sort of grasp around it, I invested it in some one on one coaching. And within my first real money trade, I completely recouped the coaching fees. I locked in an overall profit, and I soon became hooked, and trading became a second passion of mine. And I've been doing it ever since. And so when I first started trading options, I was actually trading in large accounts and helping families grow their account, where day trading was never an issue. However, when I shifted gears to trading smaller accounts under 25,000, I quickly became frustrated at the limitations that I had to day trading. And it was from this frustration that profit recycling was born and has continued to evolve to fit any market type, including 2022. I like to think of it as like my Swiss Army knife, where I can just pull it out and I have all these different options available. And I know that I can use profit recycling throughout any market condition, just like I've seen the last year. And so, profit recycling and specific with extreme volatility, let's talk a little bit about the strategy. So, why I developed profit recycling? Well, my trading is always on the focus of how to reduce and protect capital risk. And starting in those larger accounts, I was more an intraday trader at heart. I never wanted my capital out there for too long. I liked taking the quick hits and then bringing it back in. And with last year, how it was, I knew I needed to figure out a new way to trade while not paying for the extreme premiums that were built into the options, right? And that we still currently see built into these options. Instead, I wanted to find ways to use the premium to my advantage while still using a very small amount of risk. And of course, still avoiding the pesky day trading rule. So, this option strategy is primarily used to intraday trade without having to use any of those pesky day trades. For those of you who have an account under 25,000, then you understand that we are limited by 3 day trades within a week's time frame. But profit recycling allows us to take advantage of these intraday moves without ever triggering the day trading rule. And we have ways where we can lock in profits quote unquote set up those bonus trades, like I mentioned, all without technically ever closing the trade and therefore triggering that situation. However, right, the past year, due to the crazy daily ranges of 100 plus points being a bit more of the norm, it has caused individual call and put options to be rather expensive when attempting to day trade SPX or even when attempting to profit recycle in the traditional sense. So, unless you go out of the money to a strike that seems unlikely to hit at all and could potentially get eaten away by theta decay, right? It's been extremely hard to day trade this kind of market while still being mindful of your risk. And this can make it tough for traders, especially those with small accounts and those who like to keep their capital risk as small as possible. So here's an example of a profit recycling trade that we did on Tesla in December. For those of you in the profit recycling mastery, right, this might look familiar. But this was a setup that I actually talked about in the options room as well. We did a little bit of that trade in there. And it's one I actually tweeted about. For those of you who don't follow me on Twitter, right, consider doing so, as I give out trade ideas every now and then. And this was one of the ones that I had been talking about there for a while. But this was the original trade entry back here. And as we know, Tesla has seen quite a bit of volatility going into the end of the year. And this is just a snapshot of the mastery account at the time that I was actually making this slide. And the initial start of the week, whenever I took this snapshot, I started with the 140 put. And as you can see there, I opened the trade for $1. So I had on one contract $100 of risk. By the time that this snapshot of the account was taken, I had locked in a minimum $4.24 of profit. I had set up multiple bonus trades all along the option chain. Technically, 3 different bonus trades were set up for additional profit to take for that expiration week. And as we know, right, Tesla has continued to sell off. At the time of this slide, right, when I took the snapshot, it was the 12th of the 22nd of December. And from when I mentioned it prior, right, it had moved down an additional $13. And then, of course, if we just pull up Tesla today, right, the low of this move so far has been 104.64, and we're currently trading at 113. It was a very volatile, almost feels like a straight down move, right? Never went back until resistance until recently. And so it's not just with the market that you're finding these volatile situations occur, right? We're finding them across individual symbols as well. So, how can we use this strategy in 2023? Well, if volatility and in turn selling stays the same, we will be able to continue to use the same strategies used this year, taking advantage of the out of the money strikes and the spikes in premium. However, if volatility does start leaving the market, or eventually when it's going to, right? Maybe it doesn't happen this year, maybe it happens next year in 2024. Who knows? But we know that the market is overall a bullish beast. So eventually, this volatility will more than likely start to creep back out of the market. And in turn, we will get back into a more traditional sense of a bullish run, like we have experienced the majority of the time in our trading past. And when that volatility starts to leave, and as we get back into that bullish trend, then I will be switching tools and using strategies that are mindful of that crush and premium that comes when you get that initial drop of volatility. Both of these are viable profit recycling methods, but it's important to know when to use one versus the other. So if we stay in volatility, right, and you have struggled this year, then this is a great strategy to learn how to keep risk low, but take advantage of the crazy swings that occur. Maybe this is a good time to pull back up that pull. So let's stop the pull here and see how it did. Thank you. I was trying to find it and pull it up. I appreciate that. So, how well did you do trading volatility in 2022? Well, unfortunately, it looked like not too many of you were good at trading volatility. So hopefully what we're talking about here tonight can start to help you on how to trade these volatile markets while still being very mindful of your risk, because that, of course, is important. The only thing that we can control as traders, truly control, is the capital risk that we put out there, which is why I am very mindful on trying to keep it low while still being able to take fun advantage, right, of these huge swings that we've had in the market. So hopefully maybe this is helping some of you guys out. It looked like across the board, the rest were pretty even between, kind of seesaw, a little bit profitable for the year at least. And then certainly it looked like a good chunk were on a nosedive. So let's keep going here, right? If you struggled, then this is a great strategy to learn because it can keep that risk low, like I mentioned, but take advantage of the crazy swings. If you've done well this year, which it seems like at least some of you did, but have never traded around a market when that volatility drops back off, or you struggle to identify the change until it's too late, then this strategy can help keep you on the right track without giving up all the profits that you made. Knowing when the change is occurring from going to a volatile market back out of one can be very beneficial to your trading and to your account. So, what are the benefits of profit recycling? Well, keeping risks small while still allowing for excellent return. It's great for building up and growing accounts. It allows for potential runners and bonus trades for bigger profits. There's ways to manage capital and flip trades around when the chart changes direction, which we'll talk about here in a little bit. It has ways to take advantage of intraday moves without using a day trade and can potentially be applied to anyone's intraday setups while avoiding the pesky day trading rules. So, multiple strategies require multiple types of management, and oftentimes traders like to cut trades that go against them. And I get this, right? This could be due to their trading rules or being burnt by too many losers in the past, and you just want to take it off the table. But personally, before I give up on a trade, I like to see if there is a way to profit recycle it for management to still allow myself to potentially have a profit overall. And that's, of course, as long as it remains within my risk tolerance, right? I'm not about to put a lot more capital into a losing trade if it's not within my overall risk tolerance for the account. Um, and of course, instead of having it be something that is currently fighting the chart, having the trade match up with what the technicals are currently showing me. So, trade management hacks that can work in any market, but have especially been good for the market that we're in now. So, profit recycling for management can be a great tool to have in your toolbox. It can give a trader the opportunity to take a losing trade and attempt to salvage it by not necessarily taking hopium and hoping that it works out, but by profit recycling the trade to match with the current chart pattern. In turn, this can also help traders stay out of what I like to call the dark side of trading, when they get too emotional about the market changes, and in turn, right? They start doing things where they're not following the technicals. Maybe they're putting in more money than they should be, and they're falling victim to that dark side when we start changing directions or the trade's not working out as we anticipated. So, one of the trade management hacks that I have discovered for my profit recycling strategies in this current market environment complement strategies that some of the other traders here at Simpler are already using in this market environment for their SPX 0-day trades. So, it's kind of fun to see how that works. Um, the time frame that this can be used on, well, technically, this strategy works on multiple time frames from intraday all the way up to monthly. I use the strategy throughout multiple time frames personally because I love the idea of having bonus trades out there and leaving no capital risk on the table, like you kind of saw with that Tesla trade earlier. What account size do you need? Well, this is a wonderful strategy for traders with any account size. I traded this strategy in large accounts and I've traded them in small accounts. And of course, it's especially great for smaller accounts for those of you who are limited on the day trade abilities when you choose to use this as an intraday strategy. And for those, of course, who don't want capital tied up in long term trades. So here's an example of an SPX profit recycle trade that we did in the mastery as well with a bonus profit. We opened this at $9.19 for $1.20 risk per contract. A little over an hour later, we profit recycled to protect risk and we locked in a 50-cent profit per contract, which was a 41% minimum return on the trade. So the worst case scenario on the trade was that we were walking away with 50 cents. The trade ended up cash settling for a bonus profit of $2.29 per contract. So we never day traded the trade. We never triggered the day trading rule. But by the end of that day, we are walking away with a total profit of $2.79 per contract, which was a 228% return on the risk. So, what's the best type of market condition for this strategy? Well, like I mentioned, this strategy can really be used in any market type, bullish, bearish, and consolidating. However, in the current market, we have seen option premiums at their highest, but also crazy daily and weekly ranges that as traders, we want to take advantage of while not investing the full account into one trade setup, right? Into one trade idea. And so this had me personally reevaluating how to profit recycle the intraday moves while still keeping my risks small and at the forefront, right? I refuse to go over my risk tolerance. You will not see me do that. It's never going to happen. And so I know how to play volatile markets. They are so much fun for profit recycling. But what has been especially tricky the past year was how much some of these options cost whenever I used it with the traditional sense of profit recycling. For those of you who are familiar with the strategy, it was just too expensive. It would have literally taken sometimes my entire account just to get into one trade idea. And that's just not going to happen. And so it had me reevaluate things to keep that risk small, but still allowing myself to really have excellent returns and not necessarily limit them. But before we go diving a little bit more into that, let's talk about the indicators I use to help profit recycling be a little bit easier. So, one of the main keys to profit recycling being successful for me comes from the divergent bar indicator and the compound breakout tool. So it's what I like to call my dynamic duo of indicators, my Batman and Robin. When I first joined Simpler Trading, I was introduced to the master inventor of indicators, Mr. Eric Purdy. He is the director of quantitative strategies here at Simpler Trading. And I found myself at his doorstep hoping he could work his magic so that I could identify a divergent bar with a quick glance at the chart and combine the signals that I looked at to create the compound breakout tool. And each of these are my dynamic duo of indicators that I use when I trade the profit recycling strategy. So, the divergent bar indicator, what does this one do? For those of you who are not familiar with this indicator, it is used to help determine whether or not the next bar or two will create a higher high compared to the current bar that prints. So, for example, if the high of the bar that prints the divergent bar was 249, then within the next three bars, I'm looking to see if we cannot follow through with a high back above 249. It can also help determine whether or not the next bar will create a lower low or within the next three bars. So it's really great for both short-term trades, but of course, we can use it on any time frame. Same thing with the compound breakout tool, right? What does this indicator do? Well, it's used to help determine the type of trend that I could be in, bearish, bullish, or consolidating. But it can also help identify when one is starting versus when one is ending. So it can help give me that fluidity between when one is shifting into the other. So here's an example of a trade where I had both the divergent bar and compound breakout tool in the analysis to help set up for an excellent win. So here was the entry for this trade. As you can see on the hourly chart, it had started to form a bearish divergent bar here, which was that good probability that we might follow through with a lower low within the next three bars. And we did. We immediately followed through with that lower low. And we also had a bearish trend signals starting to appear on the hourly, the 10-minute chart, and didn't quite have one on the 5-minute at that time, though we did later in the day appear that helped for the potential ride lower. So in this trade, I ended up locking in overall a 1,660% return on my risk using both of those indicators. On the 30-minute chart and the hourly chart, we don't have view of the 30-minute here, but there was a bearish divergent bar that was immediately starting to form at resistance levels. And on multiple timeframes, we had the valid bearish signal on the compound breakout tool. So both the divergent bar and the compound breakout tool can be used on any time frame. It can be used from an intraday time frame all the way into a monthly or longer, right? For those of you who have seen my yearly analysis, you know that I've used it all the way up to a yearly chart. And of course, I will note that with the divergent bar, I personally don't like to look at it under a 30-minute time frame myself. I find that the smaller time frames can get a little noisy. So from an intraday perspective, I usually look at it on a 30 or higher. The best part about the divergent bar and compound breakout tool indicator is once you upload it, there's nothing you need to change except for the color if you choose to. Eric's done an excellent job at creating these indicators, so once it's added to your charts, you're good to go. So here's another example where we had some setups. We had a bearish divergent bar, we had resistance, and we had bearish signs starting to pop up in the compound breakout tool on several different time frames. And in this trade, it was an SPX trade that I had a risk for a 145. And at the end of it, I ended up locking in a 205 profit per contract, which was a 151% return on risk and a bonus trade for the close. So let's talk a little bit about the evolution of the strategies and having the premium work for you rather than against you. So there are a few ways I've found that can help maximize your profits while still minimizing your risk in the current market. One, trading far out of the money calls and puts and having premium spikes work in your favor rather than against you. And two, using wide vertical spreads to profit recycle. One of the ways I've found to help avoid paying outrageous premiums is simple. You don't, right? You just don't do it. By going out of the money before the potential volatile move can set up, it allows me to keep well within my risk tolerance. Once the volatile move starts to happen, it can actually cause a spike in options premium, even for the far out of the money options. And this spike can help me profit recycle to lock in a profit, but also have the possibility of a bigger play for the bigger daily range that can occur off of the entry. So here's an example of one of those trades that I opened earlier in the day for a 60-cent risk. I profit recycled it not that long, right? Didn't take me very long, 9:05, to profit recycle the risk and lock in a 10-cent profit while leaving a runner on. Less than 30 minutes later, after leaving it on with the runner was worth over $9 per contract, even though the underlying price never got to those strikes, right? So the underlying price never reached those strikes for the day. But because I was able to set up the trade prior to that volatile move, that spike in volatility allowed that out of the money strike to bump up from 60 cents to $9 in less than 30 minutes. So, by starting far out of the money, it allows me to stay well within my risk tolerance, but also gives me the opportunity to go with a larger contract amount. By playing for the volatility to come in and therefore cause that spike in premium, it can still allow me to cover my risk, lock in profits, but have runners on that can sometimes win the race, right? It can be like your best friend. And so here's another example of that. This was another trade I opened, surprisingly enough, at 8:59. Maybe that's a time of day I should look at, right? And this trade I opened for a 75-cent risk per contract. I profit recycled it at 1:56 p.m. So it was a little bit later, but the reason why is because I locked in a 750 profit per contract, right? So I didn't try and look for the quick win necessarily this time. I was waiting for that bigger winner to lock in, which I got a little bit later that day. And it ended up being an 1,000% return minimum. So worst case scenario on this trade, I was walking away with 1,000% return. But keep in mind, by profit recycling, I had set up an additional bonus trade with no risk. The bonus trade ended up settling for a $5 per contract. So in total, I had a $12.50 profit per contract, which was that 1,666% return. Now, normally, right, you would see that and you would say, hey, that's a great trade, right? That's a perfect day trade. You technically never used any of the day trading rules. Like, well done, pat yourself on the back. We'll get at it again the next day. However, this was one of the trades I didn't actually use the runner on. right? I just went with a small risk. But if I had gone the profit recycle runner route on this setup, the profit could have ended up being so much more. So let's take it back a second. The original strike I started with was the 40.90 strike on SPX. SPX closed that day at 40.5766. That means my runner would have cash settled for an additional $3,234 profit per contract. And keep in mind, that would be on top of what I had already locked in for the original first contract. So what does that mean? Well, it means that this profit here, combined with the 1250 I would have locked in on the first one, means I would have walked away with a total $4,484 profit with a starting risk of $150 if I had just gone one contract more for the runner, right? And in turn, that would have allowed for a 2,989% return on risk for that day. So this strategy can really benefit you with these volatile moves, but keep your risks still very small, right? And have it work in your favor. If we get a bigger volatile move like that, I am either able to, one, profit recycle the vertical itself. So instead of starting with a long call or put, right, you start with a wide vertical. So if it's a really big move initially, you can profit recycle the wide vertical itself, or you can split the contracts up into two smaller width option spreads and have multiple bonus trades on rather than just maybe one big one. And all of this, of course, is while recycling capital back into my account, ideally of locking in a profit and then setting up bonus trades to attempt to harvest additional profits on without any additional capital risk being involved, right? With all that capital and those initial profits locked in, being protected back in my account. So profit recycling on larger timeframes, like I mentioned, it's not just intraday moves or SPX that are having crazy swings in this market. And as a trader, we must learn what the best tools in our trading toolbox are for the best market environment, right? Not every strategy is necessarily going to fit every market environment. However, the profit recycling strategy for me, like I mentioned, is like a Swiss Army knife. On any time frame and in any market type, I know I can pull this strategy out and use it and keep my risks small while keeping my profits maximized, right? And that's the fun thing about this strategy is finding all the different ways I can adapt it for whatever the current market type is showing me, just like I did for this past year. So here's another example of a trade. This one was actually opened during a bit of low volatility. Now, we haven't seen that a lot this past year, but we do still experience it in volatile market environments on things like, for example, holiday weeks. So right around the Thanksgiving holiday, you can see the ranges started to get very small here in the market, especially compared to what we've had recently or even into the end of this year, arguably. And so in the profit recycling mastery, we decided to be mindful of this and we switched back into the strategies that work when there is less volatility or when that volatility is first starting to leave the market. And we opened this trade for a 65-cent net debit at 8.55 at 10:20. So just a couple hours later, we are able to lock in a 65-cent profit per contract, which was 100% return on the risk. And we had a bonus trade set up for that day. And I don't think the bonus trade ended up working out, right? Unfortunate. But worst case scenario, we still walked away with 100% return on our risk for that trade for the day. Here's an example of profit recycling Amazon, right? Now, this one had a monthly bearish divergent bar setup. So on longer time frames, we had the possibility of seeing a stronger move lower overall. So Amazon had an excellent setup on the monthly chart that I had been trading for a while now using multiple expirations to the downside. And so on one of these setups, I jumped in on September 21st at a risk of 71 cents per contract. 2 days later, I profit recycled that to lock in a 264 profit per contract and a 371% return on risk. So as you can see, right, you can do short-term swing trades still on individual symbols and still keep your risk low while trying to get nice profits. When the trade ended up closing out, I was able to take an additional dollar profit per contract, bringing my total profit to 364, which was a 512% return on the initial 71 cents of risk. For another Amazon setup I did, this one in the Profit Recycling Mastery, I actually had to dip into management side of profit recycling and still ended up with an overall winner. Maybe some of you that were in the mastery at the time remember this trade. It was a trade that we started back on September 7th. We had to manage it on September 12th with partial profits taken. On the 16th, we covered the remaining risk, leaving a runner on the table. And the rest of the trade, we profit recycled on the 23rd for a locked in profit. And the bonus trade closed out on the 30th for an additional profit, right? Overall, the max risk on this trade at one time was $152, right? So that was at most, the most risk that we had at one point was 152. By the end of the trade, I had turned it back around for a total $347 profit, which is a 228% return on that max risk. So, certainly not bad for a trade that originally went against me. And here's another one, right? In this trade on SPX, I had a profit recycle runner trade that was stuck in cement, right? The volatility ended up leaving me. Now, thankfully, as you guys saw with some of the other trade examples, you can see I keep my risk really small. So if I didn't want to do anything, that's fine. I could easily have that risk be covered by one of my winners and still keep me net ahead. However, as that volatility went into hibernation for the day and the underlying price started to shift directions, it looked like this was likely to turn into a full loss. However, as I mentioned earlier, I've been looking at different ways to try and profit recycle and manage this. And one of the things I could have done was flipped this trade around to where theta decay was my best friend rather than my enemy. And so, from the chart's technical signals that things were stalling and my trade was unlikely to work out, like I mentioned, I could have profit recycled this for management into a trade that would have benefited from the chop and a move in opposite directions. It just personally was a little bit outside my risk tolerance. So I didn't take it, but I still tracked the trade idea to see how it would have worked out. And less than 30 minutes later, my loss would have come back around to a profit once again. Now, as you guys know, in a smaller account, we're still limited by the day trades. So if I had wanted to avoid the pesky day trading rule, or maybe you're just one of those people who, like me, also like to set up bonus trades, even if you're in a larger account, you could have then profit recycled this trade one more time to guarantee that locked in profit, recycle all of the capital back into the account, and still leave on a fun bonus trade for the close. So there are other ways to profit recycle once again to have things match with the chart pattern rather than leaving it out on the table, or worse, adding more money into something that is not matching the technicals anymore. So, one way I've found to get really good at profit recycling and figuring out all these different ways to adapt it in different market environments has come from being very familiar with the option chain itself. Understanding all the different information on the option chain can really help increase your success in profit recycling and in the strategy. So, what are some of the things that we covered tonight? Well, we covered how trading strategies have changed with the market. We've talked about the profit recycling strategy and how it produces bonus profits and trades. We talked about how to make spikes in premium your friend and work in your favor, as well as how to avoid paying for those outrageous premiums for those zero point 0.7 delta SPX calls or puts, as well as specific trade management hacks for different markets and what to see, right, when that volatility starts to leave, how to adapt the strategy once again. So, trading the market in 2022 has been difficult for both new and seasoned traders. Inflation also seems to be hitting the option premiums just like everything else, and this volatility does not seem like it is leaving us anytime soon. So, instead of paying too much, I'd like to share in depth with you the ways that I have been keeping my risk low, avoiding the pattern day trading rule, especially for those of you who have small accounts and want to take advantage of that, as well as, of course, the wild swings, both from an intraday and a swing perspective. I also want to show you ways you could consider turning a losing trade back into a winner and what to do when volatility does eventually start to leave the market, whether it starts to happen tomorrow or whether it starts to happen next year. So, the class that I'll be teaching around this is called Profit Recycling Reimagined. And as y'all know, profit recycling is my go-to strategy, but it has especially been helpful in trading in and out of extreme volatility. So the strategy class will be on January 14th for those of you who are able to attend live. If you're not, but this is something you're interested in, the class is recorded and is always made available to y'all on the Simpler website, so you don't have to necessarily be there live for that day. There will also be live trading on January 19th, 26th, 31st, and February 7th, as well as office hours. This is something I'm introducing with this class, which will have February 14th, 16th, and 17th. And the idea behind the office hours is basically to allow you time to review the class. For those of you who take the live trading, of course, for those of you to be able to have the live trading, and to really get to have a better understanding of the strategy and how you've been using it. And then you can come back on these days and ask me whatever questions you have around the strategy, around the indicators, around the setups, maybe some of the live trades that we did, and get a better understanding of how it works. And of course, if there's any time left over, right, we'll go potentially back into some more live trading if that makes sense. So here are the different packages for those of you who are maybe interested. The basic package for the Profit Recycling Reimagined class starts at $497, and it, of course, includes the class, but it also includes the bonus options chain class. Like I mentioned just a little bit ago, to me, having a really good understanding and foundation of the options chain is what's helped keep me successful using the profit recycling strategy and how I've been able to use it to adapt with all these different market environments. So for those of you who do not have this class and would like it, I am making this a bonus for everyone out there. So you'll get this class. It's already been recorded, so you'll have immediate access to it. And then, of course, I would also like to give y'all a month of the profit recycling mastery, right? Some of these trades that I talked about here in tonight's webinar were taken in the profit recycling mastery last year. Like I said, some of you guys might have recognized them. And so if you just want a little bit more introduction to profit recycling in general, or maybe some of the other strategies that I've used, like last year, the compound butterfly strategy is another one that has been very successful in this market. If those are things that you're interested in and want a little bit more information on and to see how I've been trading overall, then the profit recycling mastery is a great way to go about it. I'm usually on the mic into the close each day to look over trades, look for maybe an SPX lotto pin trade into the close for any of you guys who followed me with that last year. And of course, to profit recycle. The pro package at $797 includes the class, of course, right? The live Saturday class where we focus on profit recycling in and out of volatility and the things to look out for. It too includes the bonus class on the options chain and a free month of the mastery. But with the pro, you get the indicators. So for those of you who don't have the divergent bar indicator or the compound breakout tool, those will both be included in the pro package. And like I said, I use these indicators constantly throughout all my strategies, really, but especially use them around profit recycling and certainly on these intraday setups that we've been finding here. It also, for those of you who have been following along with the Tesla trades, right, you'll know that both the divergent bars and the compound breakout tool has what's helped us find those intraday entries, even though that daily chart just looked like it was falling apart. So those have been very beneficial to me throughout my trading years, and specifically with the strategies that will be taught in this class. And then I have the elite package here at $1197, which of course includes the class itself, the live Saturday class and that recording. It includes the free bonus class of the options chain class. Instead of a free month, it's a free quarter of the mastery. So that way you have a good chunk of time with me throughout next year to see what I'm looking at. And like I mentioned, for those of you who know my longer term outlook into next year and some of the signals that I've been watching for the quarterly and yearly time frame, right? That will be a lot of fun setting up potentially some of those low risk, high reward trades going into the next year. The next 2 quarters, I should say, of this year. It's 2023 now. It, of course, also includes the divergent bars indicator and the compound breakout tool. So you'll be able to have both indicators as well for this strategy. And it includes the live trading. So it includes the 4 days of elite live trading where we'll be focused solely on finding entries, on finding setups, both from intraday standpoints all the way up to maybe swing trades if we're finding setups in things like Tesla. As an example. And then it will also include those 3 office hour sessions that I mentioned. So that way, after the class has been taken, right? Maybe you've quizzed yourself around the class, we've taken the live trading, you'll be able to come back for those office hours and really dive into whatever questions you have. And I will be more than happy to answer them, whether they're around something about the strategy itself, maybe one of the indicators, maybe a trade setup. Maybe you have a question like, hey, is this looking like a setup? How would you profit recycle this potentially? And I'll be more than happy to answer those questions. And if we get through all the questions in one of those sessions, right, then those sessions are during live trading hours. So we'll potentially go and look for some live trades if there's time to afterwards. So like I mentioned, the basic package at $497, it will be Saturday, January 14th from 12 to 4 p.m., where we'll be talking about how to avoid that pesky day trading rule, how I have been taking advantage of these wild volatile swings and have maintained being profitable in both the mastery and the challenge account this year, using these strategies. And of course, how to take advantage both from an intraday and swing perspective, all while keeping our risks small. It includes, like I mentioned, the options chain bonus class, which is a really great introduction or maybe a refresher for some of you who are a bit more seasoned traders to really dive in and understand what the option chain is about and to help incorporate that into the profit recycling strategy, as well as, of course, the profit recycling mastery for 30 days. So that way you can see this strategy being used in real time, the other strategies that I like to use. And of course, like I said, I'm on the mic quite a bit, so I'm always happy to be in the chat to help answer questions or to review our trades into the end of the day. And then, of course, another bonus that you guys are getting, I don't think it was actually on the list, but one of the bonuses that I did want to make for you guys as well is trading in and out of volatility. It's a checklist that I've created. It's a checklist for what to spot when you're starting to go into volatility or if you are trading in volatility versus things to look out for when that volatility starts to leave. So that way you're not caught off guard, right? Because unfortunately, one of the last things to leave a volatile market is the options premiums, right? The market makers really want to make you pay as much as they can for things, and they want that money to disappear so that it can go back into their pockets. And so that's why I mentioned sometimes people who have even been successful in volatile markets, they can struggle when that volatility starts to leave because they're not understanding that it's starting to leave, unfortunately. And if they've kept their risk maybe a bit on the higher side during the volatile action, well, then unfortunately, right, if you keep putting on those trades and they're not working out, those losses can start to eat up your profits. So being able to spot when you're trading out of volatility can hopefully really help keep those profits in your pocket and help you adapt into strategies that benefit from those premiums still being high, but not necessarily seeing the wild swings and the wild daily ranges that you have in more volatile market environments. And so you can see there's just a little bit of a preview there of the checklist. There's quite a bit more to each one. And the pro package, of course, you get everything I just mentioned. You get the bonus option chain class, you get the month of the mastery, you get the volatility checklist, but you also get, of course, the indicators, the divergent bar indicator, as well as the compound breakout tool. And the divergent bar indicator, like I mentioned, can help very short term within the next 3 bars, see if there may be a high or low. So on a daily chart, next 3 days, hourly chart, next 3 hours, monthly chart, next 3 months, right? Like you saw in some of the examples, I use this indicator across multiple time frames. And same thing with the compound breakout tool. That one can help you identify both a bullish and bearish and consolidating trend, as well as when you may be shifting from one into the other. The Elite package at $11.97 comes with, of course, the live class, the option bonus chain class. Instead of the mastery for a month, you'll end up getting it for the full quarter. So you'll really have a few months to dive in and see what it's all about. You'll get the divergent bar and the compound breakout tool indicators, as well as the 4 days of live trading, where we'll be focused solely on finding setups, both from intraday and swing setups, and how to profit recycle those, how to get some runner trades going to really make that work out. And then, of course, introducing the 3 office hour sessions to really give y'all time solely just to ask questions for whatever you have. And even if on the first session, let's say we answer the questions, we still have time left over, we go into live trading, right? And maybe try and find a trade or two. Well, on that next office hour session, we'll still go back to asking questions at the start. So that way, if you have any questions from just the last session until then, we'll go back, we'll revisit them. And then once again, if there's any time left over, we'll look at doing some live trading as well. So, of course, if you want more information, or let's say you have one of the indicators or maybe both of the indicators, and you're like, man, I want, the Elite package, but I have this, or maybe I'm already in the mastery, but I really want to sign up for the class, or, any sort of which way, feel free to call our team members online tonight. You can certainly call them also Monday through Friday if you're, on the fence, if you will, and just see the a la carte ways that you can mix and match this up. So we do have dynamic pricing. That way, if you already have the divergent bar, no need to pay for that again, right? We'll work it out for you so that you're not paying that full amount. And so you're not basically repaying for the indicator. I'd never want you to have to pay double for something that you might already have. So feel free to call in and they'll be able to sort you all out to make sure that the pricing matches accordingly for yourself. And then, of course, for those of you who don't know, if you end up paying through PayPal, there is the possibility to apply for PayPal credit. And if you do that and are accepted, you can pay with PayPal for 0 interest for 6 months. So it's a great way to kind of make it more an installment kind of base, right? Smaller payments at a time, without having to pay the interest for 6 months on it and pay it off within then. So once again, like I mentioned, just the 3 packages. We have the basic at $4.97 for the live Saturday class and the recording to that, the option chain bonus class, and a month of the mastery. The pro package at $7.97 includes all that, including both indicators, the divergent bar indicator and the compound breakout tool. And the Elite package gets all of that, but instead of a month, you get a full quarter of the mastery, as well as the live trading days and the office hours sessions. So once again, like I said, if you have the indicators, not a problem. Give sales or CS a call, and they'll be happy to take care of that for you so you're not double paying for something you already have. And certainly at the end of the day, right, profit recycling can help create consistent profits with limited risk and protect capital when the technicals change directions. And of course, it can help leave the guesswork out of your trading with a simple step-by-step plan and creating profits in your account while spending less time in front of your computer. It can give you certainly more information, the class for the divergent bar indicator and the compound breakout tool, and how to use these tools to help identify potential entries and exits for these strategies, as well as others that you might want to use them for. And last but not least, how to grow your account even if you've struggled in the past, which it seems like some of you certainly did with that volatility last year. So, of course, learning in real time, right? The class is kind of like the lecture, and the live trading is kind of like the lab for those of you who have taken college classes. And so the days of live trading can really be a great way to see how to use the indicators in real time and how to implement the strategy live during market hours. So you can see firsthand what my thought process is as I'm looking for setups, as I implement the setups, when I'm looking to lock in a profit, what bonus trade I'm setting up for, the reasons why I'm doing that. And they can help really give you that insight to everything that you learned from the Saturday class. So, of course, if you have any questions, right, I'm happy to answer some of them. Obviously, I probably won't be able to answer all your questions tonight. So, I'll try and answer as many as I can. And then those that I am not able to get to, please feel free to call in to support or email support. And they'll be happy to answer your questions for you. And of course, if it's an answer they that don't know, they'll end up slacking me. I'll give them the answer immediately and they'll immediately redress it right back to you. So it's a great way to go ahead and get questions answered. So let me go over here. Um, yeah, so overall, I was profitable for the year. I'd have to go back and double check exactly what I started the account with to see what the percentage was for the year. But I was profitable in both the mastery and in the challenge account. The challenge account I could actually pull up now. Um, Let me pull it up here really quickly. So, for those of you who don't know, I have a $500 challenge account. Here it was last year. I did 91 trades total last year um, overall, and all of these, of course, alerted to the mastery. And I start each month with $500, see how much I can grow it. And then at the end of the month, if I have profits, I take the profits out. If I don't have profits, then I reset the account to $500 and then see how much I can grow it again. And at the end of the year, I ended up with a $2,333 profit. So, yes, I hope that answers your question. Um, And then average return, no, probably the average return is a thousand plus, but I usually do try to aim for 100% returns when I can. Every now and then I'll take a smaller percent return if I think the technicals are starting to stall or if I need to lock in a smaller profit. But of course, that gives me the flexibility of the bonus trade. And sometimes when those bonus trades hit, like for example, if it's the same day expiration and I'm letting them cash settle to avoid the pesky day trading rule, then sometimes when those hits, those can help bring about those 100 plus return winners or, 200 plus as you saw in some of the examples. So yeah, thousands, of course, great when we can get them, especially when you can start off with a small risk like that. But I do usually look for at least 100% returns in my trades with the smaller risk that I have out there. That way, my winners can help offset my losers. And that's how I stay overall profitable for the year, even if I have to take some losers. So, and then typically I trade about one lot most of the time. Every now and then I'll do like two lots or I'll do a few more. But as you can see with most of my examples, I personally like to keep my risk really small and I do trade smaller accounts. That being said, of course, if you're in a larger account, you can always build up the contract amount to where that makes sense for you. So if you have an account like I trade like $5,000 to $10,000 accounts or like the $500 account, right? Really small. So if you have like a $50,000 account, you could always build up that contract amount to make sense for your risk tolerance. Like on the Tesla trade example, I could go back and show that one really quickly. All the way back. But here are some examples in this setup. You can see a snapshot, there it was, of the screen here of one of the weeks that we were profit recycling Tesla. And at this point, actually, we had already taken profit some of the prior weeks to lock in, to where we didn't have the risk. But it started with this trade down here, the 140 put at $1. And then we built into multiple butterflies throughout and ended up in total with a 424 profit. So the worst case scenario, as you can see, there was 424. And then with the bonus trades that we set up, there was bonus profit potentially available depending how we let those go into the end. But as you can see, most of these are one lot style trades that we start with. So I hope that helps answer your question there. Just bring that back down to there for anyone looking at the packages. And then the success of the divergent bars, they follow through the majority of the time. Obviously, there are some symbols that follow through more frequently than others, so it's good to make note of that. Um, but most of the time sorry, I was trying to find a chart there. Most of the time, this divergent bars on symbols that I look for usually have like an 80% plus rate of follow through, like 80% of the time. So the charts that, have maybe a smaller follow through rate, I don't typically look at those, but like the indexes, the bigger names, those usually have a higher percent follow through rate on bullish and bearish divergent bars. And it, of course, also it depends on, are you looking at a more bullish or bearish trend? And those are all things that I'll cover in the class. But that is my time, guys. So like I said, I'm so sorry I might not have gotten to any or all of your questions. I do apologize if that's the case. But please, if you do have any further questions that I may not have gotten to, feel free to go and send them to Simpler and send them to customer support, whether you email them or call them. And they more than likely will know the answer to your question. But if they don't, right, if it's really like a specific style question, they'll make sure to ask me about it. I'll tell them the answer and they'll make sure to get it back to you. So thank you so much for joining me tonight. I hope this was informative in some way. It gave you a little bit of insight into one of the ways that I was able to grow my accounts last year. As always, my fellow Jedis, may the trade be with you. Please try not to fall into that dark side of trading. Try not to get emotional. Be mindful of your risk. And I look forward to talking to y'all next time, whether it's at one of the simpler rooms or out and about. Bye, guys.